Good morning, ma. Welcome to Alpha Online Education, Commerce Theory part for the second year's English medium, and the chapter we are dealing with insurance services. This is the sixth session of our chapter. So, in this session we are going to study about the marine insurance. So, generally the marine insurance is generally concerned with the marine insurance is concerned with it is an agreement. It is a type of insurance that is an agreement between the two parties. One is the insurance company and another one is insured, that is a policy holder. So this is generally taken for the ships and cargoes which are trading on the seas or oceans. For that, in order to overcome with the risk of tsunami or risk of cyclones, in order to overcome from such kind of risk, generally marine insurance is taken. Let us see what is this. It is an agreement by which the insurance company agree to indemnify, means the insurance companies agree to compensate the owner of the ship or the cargo against the risk. Okay, if any risk happened, for that they are ready to give compensation which are incidental to marine adventure. Incidental, that is accidentally, by chance there are happening, accidentally there are going to be happen. Suddenly there is a cyclone in the sea, then they have to face the risk. Suddenly there is a tsunami in the ocean, then they have to face the risk. So in order to overcome from these types of risk, they take the insurance. Okay, thus there are three types of such risk generally related to the ship or cargo. Yes, generally these risk is related with the ship or cargo. Yes, thus there were three types of marine insurance. There are three types of marine insurance. What are those? Means cargo insurance, whole insurance. It means it is an insurance that is made for the total body of the ship, that is whole insurance. Okay. Next, freight insurance means whatever the goods in the ship or in the cargo, for that they will take the insurance. Okay. So let us discuss one by one what are the types of marine policies or marine insurance policies. First one is time policy. See, generally these time policies taken for a time duration. Okay, when a ship is traveling from Sri Lanka to Australia, if it is traveling, between that from Indian Ocean to it has to move towards the Antarctic Ocean. Yes, in the south side we have Antarctic Ocean. Yes. So while it moving from Indian Ocean to Antarctic Ocean, there may be a chance of floods, there may be a chance of cyclone, or there may be a chance of any kind of tsunami, or any kind of any kind of damage may be happen to the ships, maybe happen to the goods also. So while traveling from one place to another place, it will take a lot of time by the ships. Yes, by the ships or cargoes, by traveling from one place to another place, it will take a lot of time. So this time policy, what it says means it is a policy for that time period. If during that time period, if any incident happened, if any accident happened to the ship, the insured can claim the total insurance amount. Okay, that is only I have written here. This is a policy whereby the subject matter, what is the main subject here means, is insured for a specific period of time. So it is taken for a specific period of time, 3 years, 4 years, 5 years, or 3 months, 2 months, whatever it may be, based on the distance of transportation. It is suitable mainly for whole insurance, means for the total body of the ship. Okay, whole insurance means the insurance taken for the body of the ship. So this is generally suitable for these types of insurance, So time policy means it is based on the specific period of time. Next, voyage policy. So these policies meant to ensure the subject matter in transporting from one place to another place. Here the time is considered and here the distance is considered. Okay, here we are considering the time. Maybe 2 months, 3 months, 4 months, 6 months, whatever it may be the time. Okay, but now in the wage policy we are considering the distance from one place to another place. We are taking the policy for the distance. Okay, in between this distance, if anything happened to the ship or anything happened to the freight means the goods, for the goods, then this policy will help to the insured to claim the loss. Okay, the time policy is taken for the time, the wage policy is taken for the distance from transportation from one place to another place, and the mixed policy is the combination of time policy and wage policy. So mixed policy means a ship may be insured, it is insured, the ship is insured, it has the insurance for a voyage between voyage distance Chennai to Tokyo. Okay, Chennai to Tokyo, that is the distance, for a period of 6 months means time policy. So these type of policy, when we are considering the distance and the time, then that policy is known as mixed policy. If we considering time only, it is a time policy. If we considering the distance, then it is a wage policy. If you are considering the both time policy and wage policy, then it is known as mixed policy. Let us move on to the blanket policy. Blanket policy. It is taken for a certain amount. It is generally taken for certain amount, but the premium is paid on the whole. It is taken for a certain amount, but the premium is taken on the whole. For example, a ship has goods of 1 lakh rupees, but generally the insurance is taken for only 50,000 rupees goods. For remaining 50,000 rupees there is no insurance, but we will pay the premium for the whole amount. That is, for 1 lakh we are paying the premium. Okay, in the beginning of the policy, we are paying for the total amount of stock in the ship. Actually, a certain portion of the ship stock is only insured. The remaining part is not insured, even though we are paying the total amount as a premium. Okay, in the beginning of the policy, it is readjusted at the end of the terms of the policy. It is again readjusted. Okay, actually we have taken for this portion only insurance. We have to pay premium for these only. But according to the blanket policy, what it is saying means not only for the insured goods, it is paying for the whole goods, this part and that part. For both the parts we are paying the premium in the beginning, but at the end we are readjusting. Means what we are readjusting? See, in terms of policy, in accountancy with the actual amount and risk as shown by records of the insured. So at the end of the policy, what we will do means, if there is any loss occurred to the goods, this side goods or that side goods, that is deducted, and whatever the remaining premium is the total premium we will take in. We will claim the total premium. Okay, we are just making insurance for this part, but we are paying the premium for the whole part. Okay, and at the end of the policy, if any loss happened, we will get the loss amount and also the total premium amount what we have paid on both the parts, on the insured part and on the non-insured part also whatever the premium we have paid, that we will receive totally. That is blanket policy. Blanket, how you will do? How you will use the blanket in the winter season? In the same way, how it will cover your body, in the same way this policy also cover the total goods, total stock in the ship. Next, floating policy. Wherever some cargoes is shipped, the insured make a declaration about the value of the shipment. If certain cargoes, okay, cargoes means it is also a type of boats. So if certain cargoes are shipped, ship means very biggest one, cargo is the smallest one. So number of cargoes are shipped. At the time, the person, the owner will declare the value of the shipment. What is the value of that shipment? Means shipping. What is the value of that ship? And total value of the policy is reduced by that amount. Okay. The total policy amount, if it is a policy of 2 lakhs and the value of the shipment is 1 lakh, then 1 lakh is deducted from the total policy. Then how much is remain? 1 lakh is remain. Such declarations are made from time to time till the total value is exhausted and the policy is fully declared. So what it means what they will do, see, the value of the cargo is 1 lakh rupees. The value of the cargo shipment. So in the ship there is number of cargoes. So the value of the ship is that is 1 lakh rupees and the policy is taken for 2 lakhs rupees. Okay, the policy is taken for 2 lakhs rupees. Now as moving from one place to another place, as the time is going on and we are moving from one place to another place, the ship owner has to inform to the insurance policy company that up to here we are secured, up to here we are safe, up to here we are safe. From time to time they have to give the information so that till the total value is exhausted, means total 1 lakh cargoes whatever there in that shipment that are safely reached to the place, up to that they have to give clear information from time to time and policy is fully declared. At the end the policy is fully declared and the amount is given back to the policy holder. That is floating policy, means continuously you have to give the information. As you are floating on the sea, you have to give the continue information to the insurance company, to the insurer regarding the shipment. Next, fleet policy. Fleet policy is nothing but this is a policy that is generally taken for a group of ships. Okay, policy taken for a group of ships. When you see at the seaport area, there will be number of ships. So for that number of ships, they will take the insurance. Okay, it is designed to insure the whole fleet of the liners or steamers. Means it is taken for the number of ships, this policy. Next, valued policy. The value of the subject matter is agreed between the underwriter and the insured at the time of taking the insurance and it is specific in the policy itself. So value of the policy that is clearly specified in the policy itself. So while they are taking the policy, they have the idea regarding the value of that policy, whether it is a policy of 1 lakh, 5 lakhs, 10 lakhs, whatever it may be, the value of that policy is clearly mentioned on the document. What is the document is there, insurance policy document, on that it is clearly mentioned. Next, miscellaneous insurance policy. Miscellaneous means phone insurance policy, afterwards refrigerator insurance policy, bike insurance, car insurance, lorry insurance, tractor insurance, house insurance. These all are considered as the miscellaneous remaining things. Okay, next insurance terms. There are certain insurance terms are there. Surrender value. What is the meaning of surrender value? Means surrender value if the policy holder don't want to continue the insurance policy, he was just surrender himself. He don't want to pay the policy premium and he don't want that policy. He will surrender himself. I want my amount back. Then before the maturity period, he will surrender himself. Okay, I don't want to continue this policy, I want to drop. At that time, the insurance company will pay the amount to the policy holder, but it will be paid. It will be paid after the 3 years. At least 3 years have to be completed. At least 3 years have to be completed from the maturity period. Means if the maturity period is 10 years, at least 1 to 3 years have to be completed. Then only they will give the surrender value. Whatever the premium he paid up to that is completely given to the policy holder. At least 3 years is required. Okay. Next, paid up capital. If the policy holder is discontinuing the premium, he is not paying the premium regularly. Okay. So he have to pay the premium, but he is not paying the premium. So paid up only at the maturity. So whatever the value of the policy is there, whatever the amount of the policy is there, that the policy holder can claim only at the maturity time. Before the maturity time, he can't able to claim, because it is paid up capital. It will be paid only at the maturity time. He have to wait till the maturity time, even though he is not paying the premium. Okay, whatever the premium he paid, they will give that only, but he have to wait up to the maturity period. Nomination. So whenever anyone make any policy, anyone take any policy, at the time they make another person as a nominee. Okay, means if I take in policy and if I have daughter, I will make her as the nominee of my policy. In case I die, my policy amount will be transferred to her. She will get that policy amount. So before the maturity, there is one option that we can cancel or change the nominee. Who is the nominee is there, we can change the nominee. Okay, or we can cancel the nominee. So there is a chance before the maturity period. After the maturity period, we can't change the nominee. Okay, that is known as nomination. Okay. Age proof. So if suddenly a person has paid the insurance policy amount and suddenly he died. After his death, they required age proof certificate and also the death certificate that is issued by the local municipality. Okay, that certificate, that both certificates have to be submitted to the insurance company, then only they will give the insurance amount. Automatic non-forfeiture. So if premium on the policy is not paid due to and the due time, so if the premium is not paying on the policy, okay, if the premium is not paying on the policy and it has been due for a long period of time, then the policy will be lapsed. Means the policy will be totally lapsed and it can be revived only after paying up the areas of the premium. So if you want to get these if you want to get the amount of your policy, then you have to first pay up the areas means bakailu. Okay, pending amount, whatever the pending amount is there of amount regarding the premium, you have to first clear it, then only you can get the policy amount. Sometimes what happened, the policies may have automatic non for future clause, means they automatically change and cover the premium amount from the amount which is actually there, means there will change into surrender value. From the surrender value, they will receive the premium, total premium they will deduct, and afterwards anything balance is there, they will give to you. Okay, they will completely take the surrender value. They automatically, without our information, without our permission, they only surrendered that policy, and they will start receiving the premium. ఆ సరెండర్ చేసేస్తారు, ఆ పాలసీని సరెండర్ వాల్యూలోకి కన్వర్ట్ చేసేసి ఆ సరెండర్ వాల్యూని ఎవ్రీ మంత్ ప్రీమియంలోకి కట్ చేసుకుంటారు. ఇఫ్ ఎనీథింగ్ రిమైన్ దే విల్ గివ్ టు అస్, దట్ ఈస్ ఆటోమేటిక్ నాన్ ఫర్ ఫ్యూచర్. This is about the insurance terms and this is about the marine insurance. We will meet in the next session with the another topic, which is the last topic of this chapter, right? How is your preparation? Do good preparation. You are in second year, right? So do hard work and don't waste the time. Prepare your own timetable and according to that you have to go on. Okay? Yes.